You're listening to Storage Nerds Podcast, where we unravel the best-kept secret of the real estate investing world, the storage industry. Join the grassroots guru in self-storage, Stacy Rossetti, in insightful discussions about finding, funding, and running these spaces, allowing you to yield the highest returns possible. Get your foot in the door on self-storage and discover how to properly purchase facilities, negotiate with sellers, and close the deal without worries. Start unpacking that investment wisdom with Stacy right now.
And so we have, all right. The doors to the coaching program is closed right now. I only open it like a couple times a year. But for now, like if you want to learn how to get into investing in self-storage, you can always come here. I'm here every Wednesday and I just teach like whatever I want to teach. Something about storage investing, and I try to do find them, fund them, run them is what I do. So essentially it's like a week of find them, a week of fund them, a week of management, and then I do another week of like deal analysis. That's kind of how this goes. If you're coming here and watching me on Wednesdays, I don't do the same session over and over again. I just like randomly talk about one of those something in one of those topics. Okay. So that's what this Wednesday's for. Okay. And then the course is available for anybody that wants to purchase the course, and then the deal analyzer. The course is called Super Simple Self Storage. Deal analyzer helps you to learn how to analyze deals, right? If you're listening to me right now and you're like, I just don't know if it's a good deal or not, right? Then you need the deal analyzer course. Okay. And then the Wednesday trainings, and then you have the Facebook group. Make sure you join the Facebook group. It's called Super Simple Self Storage. This is where you can post out your questions as you're learning and trying to figure this out. Post your questions out. We answer every question that comes. We answer everything. So a lot of people email me and they try to ask me a question, and I just say, post that out in the group so that, everybody can chime in. We can all chime in because there's a lot of people in the Facebook group that own storage facilities and they'll put their 2 cents in. You don't have to have just my opinion, right? That's the whole point of Storage Nerds is like, I just want to be surrounded by people that are like me so that we can bounce ideas off of. Okay. So this is at stacyrossetti.com. If after you listen to me, you're like, yeah, you know what? I think I do want to do this. You can go there, get the course, get the deal analyzer. And then that will take you through the next couple of months of like really learning how to get into this industry. Okay. And then for those of you that are listening to me for the first time and you've never heard me before, I own 16 facilities. And then I partner in about, I would say like 10 or 15 more. Okay. And my students, I have around maybe 50 students or more that own storage facilities. So working through, I've done 100 masterminds in the last like 3 years. And, so me sitting and going, can you imagine that? Like me sitting at every mastermind that we've done and hearing all the students and I already know how they go through kind of their process. And then all of the guest speakers that we have at the masterminds. And, I can't miss any mastermind because I'm the facilitator, right? And then owning storage. And I own like, 12 of them that we funded ourselves, and then like 6 of them, so 11, no, 11 of them we funded ourselves, and then like the 5 other ones we syndicated out. So I think I have a pretty good a pretty good idea of like every type of deal out there. And then even the ones that we partner on, like they're also like right now one of our students is putting a fund together, and he's going to be raising money and I will be a part of that deal. And, so we have people that have bought little tiny deals all the way up to even doing their own funds. And so kind of have an idea of like how every type of deal in every scenario goes in the storage world. So that's why you're here, is so that I can kind of just brain dump, like what I'm seeing, what kind of things I'm seeing out there. So my specialty is finding deals and then funding them out of, from on the running part. It's not that I'm not like, it's not that I can't do it, but it's just not my favorite part. My husband runs the management part, and I kind of just put my 2 cents in, really, and just like yell. I'm like the director. I just kind of like yell at everybody, like, why isn't this done? And why isn't that done? But I do the finding. I'm very, very good at finding facilities that owners want to buy. This is something that comes very naturally to me. And then I'm also very good at funding deals and doing a lot of creative deal structures, and and like kind of putting money together. Those are like my two specialties. So that's really kind of what I focus on a lot of. And then the management part, obviously, most people don't get to that part. They're all trying to find and fund deals. And I'm going to tell you, those two steps are the two hardest steps of everything in the process. The management part is really not that difficult because you can just automate that and do it over and over and over. Okay. So now I got an email from somebody yesterday or the day before. And this is a question that I hear over and over and over again. And so I wanted to discuss this question today and go over how I would answer this question and kind of show you, because like it's a loaded question that everybody asks me all the time. So I kind of want to like go through that process and talk to you about how you're going to answer that question. And I told the person that emailed me, I said, I will answer that question in the Wednesday training. Hop on and listen if you can, because I'm going to go over that question today. Just let me go check I'm going to read the question, and I can't remember what the whole question says, but read it, and then I'm going to come back, and then because I put it right over here. Hang on. Okay, so this is good. So he emails me and he asks me, what is the minimum amount of investment that he would need in order to get into the storage investing? And so this is a question that comes to me quite often. It's like, how much money do I need in order to be able to invest in self-storage? Okay. And so this is the first part of this. And then the second part is, do I need to be an accredited investor? And then he asks, he's like, I don't have $1 million to invest. What if somebody only has like 50,000 or 100,000? Or maybe, maybe 200,000. And then he says, is that enough money? Like, should I even try this? Okay. Anybody else thought this? Put into the chat if you thought this. Like, how much money do I really need in order to get into this industry? And, like, should I move forward on this? That's the question. Okay. So I'm going to answer that question today with all of the ways that you can get into this industry. So I'm going to answer the question right now. The truth is, how much money do I need in order to get into the self-storage investing world, in order to own a storage facility, or in order to invest in self-storage? How much money do I need? The truth of the matter is that you really don't need any money at all to get into this industry. You don't need any money. I own 16 storage facilities, and I have not put a dime of my own money into purchasing any of them. Right? I have not put a dime of I'm 100% financially funded, and I own 16 facilities and around maybe, I don't know how much, depending on the market, 20 to $30 million worth of storage. Okay. And I haven't put a dime of my own money into purchasing any of it. So how is that even possible? Is that even possible? All right. And so how can you do that? That's where I want to get in today. Now, when you apply for Storage Nerds, like when you come in through my application process, I am basically like, I am telling you that in order to get into Storage Nerds, you have to be able to pay for storage. And storage is not expensive, right? Depending on like, which package you pick or whatever, like it's not cheap. All right, it's expensive to get in. So you have to be able to afford that, because that's what he was asking, is like, how much money do I need? And then also what I do is I ask the question, how much money do you have in order to invest in buying a storage facility? Is it less than $50,000? Or is it $50,000 to $100,000? Or is it $100,000 to like, $200,000? Or is it like $200,000 plus? That's like one of the questions that I have on my storage application. The reason that I asked that question is not because, if you don't have any money, you can't do this. The reason I asked that question is because that question determines which path you're going to take in the storage investing world, right? Because if you answer the question $50,000 or less, then there is a way for you to do this. All right. And if you answered, you have $300,000 or more, or $200,000 or more, there's a different way for you to do this. So what you have to do is you have to really determine how much money can you come up with? How much money can you come up with in order to get into this industry? All right. So we talked about this in the funding boot camp that I just had, not last weekend, but the weekend before. We spent 2 whole days discussing this very question. And this question and how much money that you can come up with is going to determine how you're going to be able to do something. Okay. So let's go through each one of those scenarios. Okay. If I'm asking you the question, how much money do you have in order to invest in self storage? And you're telling me $50,000 or less, okay, then your scenario looks like this. Okay. So investment capital. Okay. And you're going to say 50K or less. Okay. So you have a couple of different scenarios. Number one, this is something that we talked about all day Saturday in the boot camp on how to do this. You have to, if you want to buy a storage facility, you have to learn how to raise capital. You have to learn how to raise capital. Okay. So if you don't have a lot of money, then you can use other people's money. Guess what? I never have any money. All my money is always going to like operational funds or investing in another storage facility. Like right now, we are, looking for a piece of land that we're going to be buying to build on. Right. So, like every penny that we make on all the facilities that we have are either going back into managing the properties that we're running or is going to buy another property. Like we rarely ever have any money. So what we have to do is we have to find people that will give us money. That's why I'm always posting out who's got 200 grand, who's got 300 grand, on my list. I'm asking for money all the time. Right? So you have to be okay. If you have $50,000 or less, you have to ask for money. And you have to be okay to do that. When I got started in self-storage investing, I bought a storage facility. I bought a $250,000 storage facility, and I didn't put a dime of my own money into any of it. And I just had somebody give me $250,000 to purchase that facility. And I borrowed that money, and I didn't put any money in for that. Well, there's people out there that will give you money, and you can either, right, you can have a debt loan, right, or you can partner, right? You can be the boots on the ground person. You can be the person that manages it. I have a student right now. He's 23 years old. Like he don't have any. Now he has money because he's buying a sixth facility. But like when he first started, he didn't have any money, so he was just like, "I'll be the boots on the ground person. If anybody has any money in storage nerds and they want to buy a storage facility, I will manage it for them." Right, and that's how he went out. He had less than 50,000. He had no money. All right, and so now he owns he's buying his sixth one right now. Okay. So if you want to hear his story on how he got into storage and bought, 5 storage facilities without any money at all, then just, go to my YouTube page and search for Luther. And Luther's story, I'm telling you, will inspire you to understand you do not need any money to get into this business. Even though I tell you that all the time, Nobody listens to me, right? I'm just like the coach. All right. But Luther has done that. A lot of students in the coaching program have done that. So what he got really good at doing is and another thing that he did, right? He got the owner to seller finance deal. One of the facilities was 0% down, right? He got, and you know what I'm saying, and then on his like third facility or fourth facility, I can't remember which one, he got the bank collateralized one of his other facilities. Okay. So, if you don't have any money and you want to buy a storage facility, you have options. It's just that you have to be a little bit more creative in order to do it. But this right here, this is how every single one of my facilities has been bought. I've raised money, I've partnered, I've gotten debt loans with like interest only payments, right? I've done like management. I'm like, we're a manager in one of our properties and we get a cut for that, right? And then I've gotten a lot of property seller finance with no money down. All right. This is 100% debt loan. Like my private lender gave me like $250,000 to buy a facility. It was 100% for the purchase price. And all I did in order to find that was I just asked people for money. Okay. This is if you want. So all this right here is if you want to buy a storage facility. Okay. The second thing with $50,000 or less is that you can wholesale. You can wholesale self-storage. Okay. And so what that is like, if people don't know, this is the seller, this is the storage facility, and this is you, right? You go to the seller and you ask him if he wants to sell his property. He says, yes, I'll sell it for 100K. And then you take the storage facility. Actually, that's wrong. You take the contract and then you find the buyer and you sell the storage facility, right, to the buyer for 150K. And then together you make 50K on this deal, right? That's people happy. Okay. This is wholesaling. I wholesale. I wholesale. I mean, that's what turnkey acquisitions is like, it's wholesale. That's what it is. All right. And so you can make a fee on the difference of the purchase price, right? Or you can also get an equity, right? So you could say, look, give me 5% or 10% of the deal and you can have this. Like, I found this deal for you. And if you buy this deal, my cut in your deal is 5%. That's what turnkey acquisitions does, right? You can do 10%, whatever you want to do, You can either get a fee or you could get a cut in the deal. I choose a cut in the deal. Okay. And so that's what wholesaling is. So if you don't have any money right now or very little money and you're looking at all these deals and you're like, oh my gosh, I can't afford, I can't get into it. Like, I'm out, I give up, right? Then you're really just shooting yourself in the foot, right? And you're losing out on opportunities because you do not understand that you do not need any money to get into storage. You need to be creative. You need to raise money. You need to find private lenders. You need to find people that are open to partnering with you. And you could be the boots on the ground person, manage the deal, get your foot in the door that way. Or you can get the owner to seller finance with 0% down. Or you can, if you already have a facility, then you can get the bank to collateralize that facility. And you can use that money to buy another facility. Those are all great ways. Or you can just wholesale. Just go out there and find the facility and then find the buyer and you just put them together and get a cut the deal somehow. All right. So that's the first answer to how much money do I need in order to get into this business. Okay. If you let's just say that you have 50K to 100K. All right. You guys let me know if this is you or not. Right. But so like you have some money, or you got a little bit of money, right? So now you're like, okay, now what? So first you have to assess, what kind of a facility that you want to buy. 50 to 100K. I know it seems like a lot of money to people, but it really ain't that much money. All right. And storage is expensive. It's like really expensive. And it's just getting more and more expensive every day. That's why you really should be focusing on raising money or figuring out some creative way to get into this business, because those are the ones that win. The ones that understand creative deal structures and raising money, those are the ones that win in real estate. You talk about all these people, in the storage world that have $100 million or $50 million in assets or whatever. Then, I'm telling you that the way that they do that is they raise money. Same thing if you in a 50K to 100K, you have to learn how to raise money. You have to be able to ask people for money. If you only have 50 or 100K, then you need to, like, what you need to do is you need to understand that if you get a bank loan right now, you're going to need 30% down, right? And run your numbers at 8% interest. 50 to 100K is not going to buy you a big facility. Right, 50 to 100K is going to get you like a $500,000 facility or less. Okay, right now. Now the issue is that like, because we have a student right now that she's buying a $550,000 facility and the bank wants $200,000 down. Okay, that's where it's at right now, and I'm going to tell y'all that's where it's going to be for the next couple of years. I just read an article this morning where it's like the feds are not going to decrease interest rates, right? That's like, it is what it is. So now that you know that you're going to have to do 30% down and 8% interest, then you have to ask yourself, what do I want to buy? What kind of a facility do I want to buy? Right? And so 50 to 100K, like I have a student right now that he's like, I've got 50K. And then he started looking at these like little tiny facilities, and he was like 30 units and stuff. And I'm like, right now it is very, very difficult to make money on a facility that is less than $1 million. Just because it's like, the interest rates are so, high, and the down payments are so high as well too. Like, it's very difficult to make money on a smaller facility. It just is. Every once in a while you'll come across a deal where it's like, it makes sense. But if you have to get a bank loan and you have to get this is a conventional loan, right? Then the numbers are super tight. And then if you get an SBA loan, you're at like 15% down and like 10% interest or higher. And a lot of times SBA loans are a variable rate. SBA is like, it's a small business administration. SBA gives like business loans, what they do. And they love storage. They love to invest in self-storage because self-storage has like a very, very low foreclosure rate. And so this is something that they really like. And so they're willing to give a loan. It's a government-backed loan, but they offer variable rates, right? And we know that the feds are just like, I don't know when I'm going to be decreasing the rates or whatever. So like, you just don't know what that interest rate is going to be. It's very hard to determine what you're going to have to pay, right? So it's just a little bit more risky. But if you can find a deal where you're like 50 cents on the dollar, where, then you may have that spread available to be able to get a loan like this. But when you go and get a bank loan, whether it's SBA or conventional loan, you have to have a big spread right now. And it's just like, deals are not like that anymore. Like when I started, that was a good old day. And that was the good old days. I miss the good old days when I could just buy like that $250,000 property that I have, right? That I bought, that I told you about, that I got, 100% financing on, is worth over $1 million right now. If you were in the business in like 2016, 2015, 16, 17, 18, I mean, that is when the spreads were there. But the spreads are just not there anymore. All right. It's a good deal, but it's not an amazing deal. And I see people out there looking for like super amazing deals, amazing deals, good, like, great deals happen on bigger deals. When you're hearing, oh, I doubled and tripled the value, that's really like $2 million or more, right? That's kind of where you get like amazing deals. That's what we're seeing, okay? So in the 50 to 100 grand ain't gonna get you $2 million, all right? Because you got to put 30% down. So it's barely gonna get you 500 grand, okay? So then you're like, okay, so like I only got 50 to 100 grand. Like, should I even get it? Like, what's going? It's like super tight to me. And like, this is what happened with one of my students. He's like, I only got 50 grand. And I was like, then you need to find partners. You need to find other people that will be interested in working with you. And there is nothing wrong with partnering on a deal. Nothing wrong. When I syndicate my deals out and I'm the GP and I have the LPs, those are just partners. They're investors. They're partners. They're partnering on a deal. And I'm only getting like 30% of the deal. So I'm giving up 70%. But I mean, for all these bigger deals that are $1 million or more, I mean, I'm okay with doing that. There's nothing wrong with giving up, some of the deal so I can move on to the next big deal. I can keep moving on to the next big deal. Okay. So you have to be open. If you only have 50 to 100K, you need to be focusing on, like, if you want to buy the smaller deal, you got to look for an amazing deal in a tertiary market, right? So you're only in a tertiary market. That's a tertiary market. Okay. And you can afford 500K or less, unless you are good or you are okay with asking people for money. If you are okay with asking for people for money, then the sky is the limit. You just do any deal, right? All right. Or you could partner, right? Or you could, syndicate. Talked about syndication in the boot camp. And then, or what you could do with 50 to 100K is you could find a deal where the owner is okay with taking just 10% down. All right. So, and then seller finance with 10% down, right? Or zero, like zero. I'll say 0 to 10% down. 0 to 10% down. Okay. So we have a student that bought a facility in Texas, and she bought like a $330,000 facility for 10% down. The owner seller financed it, so she only had to come up with $30,000. So that means that you have to be good at getting the owner to be the bank. If you can get the owner to be the bank, the sky is the limit. Say, look, sell me this facility and I'll put 10% down. Now, when you find a $2 million facility and the owner wants to sell their finance, 10% is rare, but not impossible. Oh, I have a student that bought a $1.2 million facility with $200,000 down. That's it. That's all he had to come up with. And that facility is worth like $2.5 million. To be able to double the value of the property. Right. And the owner was like, yeah, just give me a couple hundred grand. I'll be happy, So, like, if you understand the concept of seller financing, 50 to 100 grand is a lot of money. All right. But you don't want to use that 50 grand to go to a bank and buy a $300,000, facility, because the returns right now are so high and are not so high because of the interest rates and stuff. Okay, so if you need to buy $1 million or less facility, you have to be good at raising money and doing creative deal structure, or being okay with partnering and syndicating. Okay, so now let's get into the 100, like the 100 to the 200. Now, obviously, everything that I'm telling you is like, applies to like anything really, you know what I'm saying? But, like if a lot of people have 100 to 200 grand. A lot of people I talk to, they say like, I got 100 grand. They saved up 100 grand, and it ain't easy to save 100 grand. I totally get that. It ain't easy. And so you're thinking in your mind, like, I need to make sure this 100 grand gets me like the best bang for my buck. Is storage it? Multifamily? Do I need to go buy some land? What, should I start a chicken farm? Like you're trying to figure out what to do, right? So like, I get it. You know what I'm saying? I'm going to tell you storage is very, very lucrative. It's very lucrative, but it's a buy and hold strategy. And it's only lucrative when you don't have to use a bank. It's not only lucrative, but it's more lucrative when you don't use a bank. Right. And because, like, well, I would say right now, right? Because, like, interest rates are so high. So being able to do things like syndicating, partnering, creative deal structures, this is where you're really over the course of the next couple of years going to shine and make a lot of money because, banks are just being really conservative, on everything. They're sticking to that 1.3, debt to service ratio. Like they want that. So that means you just have a really big spread. So your money, like what happens is your money doesn't take you that, you know, that's really the issue. Like back a couple years ago, like, banks were okay with like 1.15 to 1.2 DSRs. And then that LTV, that loan to value was a little bit smaller. Now they want like, 70%, 65%, 60% LTV. That means they want that bigger spread to make sure that you can afford that mortgage on a regular basis. Okay. So 100 to 200K. So now you got some money. Now you're like, yeah, I got some money. I was like, yeah, I got 200K. And 200, like 100 to 200K is going to get you in. It will get you. I would say it could most likely get you into the $1 million plus area, right? So in the world of storage, everything I tell y'all is just my opinion. All right. So if you guys listen to everybody else, they may tell you totally opposite. I have no idea. So I don't listen to anybody else. But like this is kind of what I'm seeing, all right, just so y'all know, okay? So it's like $1 million or less. All right, this is tier one, and then you have like 1 million to 2 million. It's like kind of tier two, and then you've got like 2 million plus. Okay, now most of the people that listened and followed to me, like they're not going to be buying $3 million plus storage facilities. Like I'm the person that's going to get your foot in the door. So typically, people are kind of like in these three price ranges. Okay, for me. Okay, so and I've never bought like big, huge storage facilities. So if y'all want a big, huge storage facility, I'm not the person. I may not be the person to help you with this. Now, all the concepts that I teach, like you can never really apply them to any of them. But like when you get into like $3 million plus, actually 50,000 square feet or plus or more, that's when you're really like syndicating and doing a lot of like funds and things like that, which I can do, but I do those for like smaller. Okay, so 1 million or less, 1 to 2 million, 2 million plus. Okay. So now you're like, okay, so you can definitely afford something in the 1 million or less, right? We all know that. We've discussed that. This is like, where the interest rates, rates make everything tight, right? So when I say tight, I mean like, your cash flow. I say cash flow. Let's put that in cash flow. Now your upside on the back end may be amazing, may be great. Like you could buy something for 750 grand and sell it for $1.5 million in like the next 3 to 5 years. Okay. So upsides on storage are always rather good, depending on whether or not it's a mismanaged facility, right? I talk about this. That says mismanaged and or cash flowing. So now you're looking for be like, I got 50 grand, I got 100 grand, I got 200 grand to get out there and look for a facility, right? So now you're thinking, okay, if it's 30% down, I could barely even afford 700 grand right now. So like that's what I'm looking for, okay? And so then you start looking for a mismanaged or cash flow. You come across one of these properties for 750 grand, and depending on how it's run, how it's managed, which is really how you make money in this industry, then you're going to either come out of pocket on a monthly basis to get it where it needs to be because the cash flow is tight, right? You're going to most likely on these types of deals, $1 million or less, even if it's cash flowing, it's probably not cash flowing where it should be, and you're still going to be coming out of pocket on it, right? Because the interest rate's so high and all this kind of stuff. Okay. So just keep that in mind. That's what I'm personally seeing is $1 million or less. It doesn't matter if it's mismanaged or not. Most likely you're coming out of pocket, right? To break even. Now you have to ask yourself, am I okay with coming out of pocket every single month? And on my application, when you apply for storage nerds, I ask, like, are you okay with coming out of pocket every single month in order to make a return? So for instance, the student that I told you that bought a 1.2 million facility. He got it seller finance. He had to put $200,000 down. So the seller finance is like $1 million, right? So that's what the owner's doing. And so he has to, like, his mortgage is around $6,000 a month. And his expenses are maybe like $4,000 or $5,000 a month. So he's like $10,000, $11,000, $12,000 a month, something like that. And that property was only when he was only making like $8,000 or $9,000 a month. But he knows that if it's filled and he gets it to the prices it's supposed to be, because that owner was really like the lowest in town and it was like maybe 50% full, then he knows that he'll be able to sell that property for $2.5 million within the next 2 to 3 years. And so he has to come out of pocket every single month for the next 2 years at like maybe $3,000 to $5,000 a month, depending on, how long he owns the property, how long it takes him to stabilize that property. So then he asks himself, am I okay with coming out of pocket every single month for the next 2 years up to, $5,000 a month? That's going to cost me, let's say, about 100 grand or so. And in order to make $1 million on the back end when I sell the property, that is how you look at properties that are $1 million or less. That's how you're going to look at them. So you don't look at them as like, oh, this is not this, I can't afford it or whatever. You look at it like, what is my opportunity? How much money am I going to make on the back end? And, am I okay with coming out of pocket? All right. Does that make sense? And so I told him, I was going to buy the property. Like if he didn't buy it, I was going to buy the property. I was like, I will buy the properties because this is the type of property we buy every day. We're coming out of pocket all the time just to like bucks. And this is a question a lot of people really kind of struggle with. You have to buy this property. You're gonna make $1 million in the next couple of years if you could just spend 150 grand. Isn't that a great deal? But a lot of people don't understand that. But that is what $1 million or less is typically you're going to be seeing right now in this market. And you have to be okay with that. So you can definitely buy with 100 grand. You could definitely buy $1 million or less property, and you just have to know that the cash flow is going to be tight, or you're going to have to come out of pocket. So you ask yourself, is that okay? And then you have like $1 million to $2 million. Okay, so this is where you're like, okay, I really want to get into the $1 million to $2 million. So this is where you're going to have to seller finance or partner or syndicate. So that's where the raising money comes into play, right? So if you have 100 to 200 grand, that is not going to get you into the $1 million to $2 million right now. So you have to say, okay, like I'm going to really push seller financing, and I can do like 10 to 20% down depending on the deal, right? Or I'm going to try to find somebody else that can help me bring the down payment for a deal. We're going to partner on it. Yeah. Okay? So that is the $1 to $2 million is working right now. That's how we're seeing it. And that's why, like on our deal analyzer, when you buy our deal analyzer, we are running at a cash. We're running like, let's pay cash. Let's run numbers at like bank financing. Let's run numbers at private lending. And then let's also run numbers at like seller finance. And let's come up with a whole bunch of different offers. And we make that offer. We're making like 4 offers based on a creative structure, because we know that if the owner is open to working with us, and I'm going to tell y'all, a lot of storage facility owners are open to doing this, If somebody would make me an offer on my properties, I would be open to doing this too. But like the truth is nobody does this. But storage facility owners are very open to this. And I know because I talk to owners every week. Every week, I either talk to them on buying their facility, or I talk to them on getting into the storage nurse coaching program. So I know, and I am an owner, and I understand the mindset of what they're thinking. But the thing is most people are not doing this. Most people are not understanding this. Okay. And then we're like, okay, $2 million plus. There's no way with $100,000 or $200,000 that I can buy a $2 million property. Well, guess what? I have a student right now in the coaching program that's buying a $2.5 million property, 2.3 million property, and he only has $200,000. How is he doing this? Right? How is he doing this? And he is syndicating the deal out. Now, when everybody's like, oh my gosh, syndicate, there's no way I could do that. And this is his very first storage facility that he has ever bought. Okay. But when I say syndicating means that he needs $600,000 down, and he needs like another 150K to 200K in capex. So he needs, let's say, like $750,000 to $800,000, right? So he has this number available, and he knows he has 200K. So he has to find a couple other people to bring the money in. So he creates a fund, which is basically just a way of putting a partnership together. And he comes up with other people. He's like 3 other people that come up with the money together. They are the general partners, and then he's the general partner, and then they're the LP in the deal. Okay. This is all it is just another way of putting a deal, structuring a deal. It's creative deal structuring at its finest. And so now he's going to have 40% stake in the deal, partnering on a $2.3 million facility that he'll be able to sell for like $5 million in the next like 3 to 5 years. And then they will all be able to share in the profits. And he only has like 200 grand. All right. So 200 grand, if you understand the creative deal structures, is a lot of money to buy stuff. All right. But if you do not understand what I'm telling you right now and utilizing it, you are only going to be able to buy this less than that. You're stuck in tier 1. That's what's happening. And this is where most people stay. Okay. So I want you to start thinking outside the box. All right. And understanding these structures so that you can get into this industry. All right. And you can buy not just 1, but 2, 3, 4 of these. All right. That is where wealth is created. So the question I get asked is, how much money do I need in order to get into this industry? That's a question that only you can answer. How am I going to be able? What tier do I want to be in? Where do I want to be? Okay. And then, of course, if you have like 300,000 plus, the sky's the limit. The sky is the limit. Right. I talked to somebody who's like, oh, I come up with like 500 grand. He's like, is that enough? And I'm like, you could buy like so many storage facilities for 500 grand. Just as long as you stick with me, I'll hold your hand. We're going to find you some deals, and we're going to get out there and look and put some offers. Okay. So your job is to, right now in this industry, for the next year to 2 years, your job is twofold. Your job is to make offers and to raise money. Make offers and ask people like for money. That's it. If you want to get into this industry. Okay. All right. Making offers is, buying the course. Okay. Right. Making offers is, buying the course, buying the deal analyzer, learning how to analyze deals, and then being able to buy storage facilities is like learning how to raise money, learning how to do creative deal structure. The deal analyzer will help you with the creative deal structure, hands down. That is what the offer letter's for, the magic offer. Okay. All right. I appreciate you guys all hanging in, listening to me blab. I hope I answered the question. How much money do I need to get into this industry? All right. And I look forward to seeing you guys at the next session. Take care.
Thank you for joining us for this episode of Storage Nerds. Hope this informative conversation inspired you to go out there and jump into this highly profitable business venture that people rarely talk about. Get more tips on storage space investing at www.stacyrossetti.com. Don't forget to subscribe to the show and leave a rating. Together, let's build that thriving passive income one storage space at a time. Until next time.